Chakri, afternoon. Thanks a lot for joining us.
Good afternoon.
What are you making of this extremely sharp volatility which we are looking at in the market, of course triggered by what's happening in China? What's your analysis?
I think the volatility is because of two or three factors. One is falling commodity prices and the pace at which they've fallen. And the second is China's actions in terms of devaluing its currency as well as cutting interest rates. Now, these things mean different things to different countries. On one hand, it's negative for commodity manufacturers such as Brazil and Russia. It's also bad for export-dependent countries like Taiwan and Korea. On the other hand, India is an importer of commodities which will benefit now as a result. So I think net, I think this market volatility has created an opportunity, if anything, for India.
Chakri, you've been a BRIC fund manager yourself, and I assume that you understand China much more closely. You followed it and invested in it. The way stock prices are, coming down sharply, and the funds are, redeeming their exposure there. Do you think it will actually benefit India in the long term? Some of that money which is being pulled out of China, does it make a case that it may, come to Indian shores?
Well, indirectly, yes, in the sense that what's happening in China is twofold. One, the earnings growth has slowed down. It's slowed down to about 2%. On the other hand, the GDP is still growing at 6.5%. Now, by devaluing its currency, what China has done is exporting disinflation, which is good for developed economies like the US and developed Europe, who are India's main trading partners. And therefore, India's exports look good. India is primarily a services-driven economy. 2/3 of its GDP comes from domestic factors. And as a result of this, I think India will be greater protected versus, let's say, other emerging countries, and therefore a beneficiary of the flows.
Chakri, very quickly, let's talk about the Indian markets for a moment. We're already at almost 7,000 on the Nifty. What is the worst case scenario do you really see for Nifty? Are there chances that we may slip in this bout of volatility? 7,500 or lower can be assumed, or you think that's a far-fetched call?
I think we're pretty much close to the bottom, give or take a couple of percent here is pretty much it. Because on one hand, all the commodity-dependent companies in the Nifty, such as all the metals, the Hindalcos of the world and the ONGCs of the world, are already down at rock-bottom valuations. The non-commodity, non-energy companies, on the other hand, are trading at very fair valuations. So these companies, I think we're probably trading at around 12 times. And so I think now what is important is when earnings will revive for India, which is, I think, a 2017 phenomena. And therefore, the markets were being forward-looking should start moving up in due course.
All right, Chakri, give us a flavor of what are the companies you have met at this conference or you're looking forward to meet. You've set up your meetings to give us a sense of your interest in the broader market.
Yes, I think the broader market is exceedingly important and also is a reflection of the Indian economy because you have Nifty's for just 50-odd companies in a way. And there are a number of companies which will benefit: logistics companies from low fuel prices, export-dependent companies such as IT and pharma, auto ancillaries. And so I'm looking to meet a number of companies, including Snowman Logistics, Gabriel, amongst others. And I think these are good, solid companies who are today's mid-caps and can very well be tomorrow's large caps.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.